Hello class, this is part 3 video for your chapter 3. So in the early section we have identified the nature of each transaction, and then now we have to prepare the income statement and statement of financial position for the company. So we start from the income statement. So the first item in your income statement is revenue. So revenue of the company is 864,530. So when you do the exercise for income statement and statement of financial position, when you have record this item, you can do this. You can strike through the word. So it means that you have record this item in your income statement. So you can avoid misrecording or the item forget to record. So next, after that we record return inwards. Return inwards is the product returned by your customer, so this will reduce your overall sales, so it's a less. So return inwards of the company 45160, and similarly we strike through return inwards. So we use the revenue minus return inwards, we get net revenue, which is 819,370. Next, we have to less cost of goods sold. The first item in your cost of goods sold is opening stock, or we can say opening inventory. Opening inventory 45,000, and again we strike through the opening inventory. Next, we add purchase during the year. Purchase is this one, 453,050. So we strike through. Next, we have to add carriage inwards. Carriage inwards is the cost to bring in the product, and then followed by custom duty. Custom duty is the fee that you pay to custom to carry in the imported goods. So we strike through custom duty, we strike through carriage inwards. After that, we have to minus return outwards. Return outwards is the product that you return to your supplier, so this will reduce your overall purchase, so it's a minus. Return outwards, where is the return outwards? Here. And then next, we also minus the closing inventories. So closing inventory you can find at the bottom of your textbook, 40,000. So after that, you get 597,060, and you use your net revenue or net sales minus your cost of goods sold, you can get gross profit. How to get your gross profit? You use 819 minus 597. So 222,310. This is your gross profit. Next, so here to here we have complete the trading account section. After that, we list down the income and expenses of the company. So for income, we need to add the income. So this company, we have two income, which is your purchase discount purchase discount is 5640. And then you have bank interest income, which is 1340. Again, we strike through the bank interest income and also purchase discount. So your total income is 6980, and then you less the expenses of the company. So we follow the sequence in your trial balance to record the expenses. The first one is carriage outwards. Carriage outwards is the transport fee that you pay for the delivery of product to your customer. So this is expenses. Return hours also being recorded. So strike through first. Next one, sales discount. Sales discount is the discount that you give to your customer when they make early payment or they pay more. Next, office expenses. So office expenses is 15,800, followed by rental. So this is the fee that you pay for the use of paid space area. Next, bank charges. Bank charges 150. Salaries and wages. So this salary and wages is the fee that you pay for your employee or worker. Next, you have upkeep of premises. So upkeep has the same meaning of maintain. It means that you repair the building. So it's 4560. And lastly, printing and stationery. 4220. So class, for printing and stationery, don't recognize as an asset because your stationery is unlikely to use more than a year. So we treat as an expenses. Alright, so we strike through those items that we have record. Carriage outward, sales discount, office expenses, rental, bank charges, salary, upkeep, and printing. So before we close the income statement, let's scan the trial balance again to make sure that you have record everything for the IS. Yes, we have record here, also record. Right, and then we total the expenses. So what we can get, we use this should be a negative amount because its expenses is less. So we use gross profit plus income less expenses. So 26610. This is a positive amount. So this is the net profit of the company. Alright, we can put double line. So it means that this is a final answer. I repeat, we use the gross profit add income minus expenses. If the amount is positive, it means that this is net profit. If negative, this is net loss. So basically, we have complete the income statement. You can take a look now. Alright, the next section we are going to do is statement of financial position. So let's hide this first. Okay, for statement of financial position, the first item will be assets and non-current assets. So what are the non-current assets for the company? We have premises, we have office equipment. Those items are likely to use more than a year. we consider as non-current asset. So 150 for premises, 35,000 for office equipment, and no more NCA. So these two. So your total non-current asset is 185,000, and then current asset. So current asset, we follow the sequence. We start from inventories, which is 40,000. We have trade receivables, 15780, and we have cash, 8910. So the total current asset we have is 64690. Total asset will be using your non-current asset add current asset, 249690. This is your total asset. Next, we record the liabilities and equities. So we record the liability first. The first item is current liabilities. And then what we have? We have trade payables, $13120, and then we have bank. Bank, because it's a negative balance, so we put bank of draft, 12540. So we strike through the item that we have record. We have record trade receivable, payables. We also record cash and bank. So the total current liability we have is 25660. Next, we record the non-current liabilities of the company. So we have long-term bank borrowing, so long-term bank borrowing means that you will make payment for this amount more than a year, so we classify as non-current. So 100,000. Your total liability, $125,660. And then the next section, so we strike through this amount first. Next, we record the equities of the company. Equities, we start from share capital. Share capital is 100,000. And then we include the retained earnings brought down, which is the opening balances, 53420. Class, take note, if the retained earning is on the credit side, this is a positive amount. If the retained earning is on the debit side, this is a negative amount. And we add net profit. So let's see what is the net profit of the company, 26610. We extract the net profit from the income statement. and then we less the drawings of the company. Drawings of the company is 56,000, so less is a negative. And then the retained earning carried out will be the sum of the above. So you get your total equity. This is your total equities. So this is your total liabilities. And then we add the total liabilities and equities. We add these two together. We get 249690. So if you can match your total asset to the total of liability plus equity, if you can match these two amounts, it means that your statement of financial position is balanced. It means that the amount is tally. But not necessary that your amount is tally, you are correct. But if your total asset cannot match to your total liabilities and equity, it means that you have something wrong in your either income statement or statement of financial position. So that's all for the answer of our classroom exercise 3.1. And classroom exercise 3.2, I will go through with you in our live section. So that's all for this video, and that's all for our chapter 3. Thank you. Thanks for watching.